To do this, simply right-click on the trade you want to modify and click on Modify or Delete. This will bring up the order window. Here, you can adjust your stop loss or take profit based on your trading strategy. Once you've made the changes, just click the Modify button and that's it. The trade has been modified. Additionally, you can view the trade line on the chart window and set or modify the stop loss or take profit directly from there. For instance, to set a take profit for this trade, simply drag the line to your desired price on the chart and it's done. The take profit is set. Likewise, you can easily adjust an existing stop loss or take profit in the same way. Now, let's move on to setting a trailing stop. Just right-click on the trade, go to Trailing Stop from the drop-down menu, choose the number of points you want to use for the trailing stop, and that's it. Next, let's talk about how to partially close a trade. Again, right-click on the specific trade and click on Modify or Delete. The order window will pop up again. In the Type field, select Market Execution from the drop-down and then specify the lot size you want to close.
What's going on?
Hello.
Howdy. Yeah, I still hear that echo. I don't know where that's coming from. Yeah, I got everything. I got only my regular volume, and that's it. Well, how's everything going down under?
1 second while I just look at this from back end, but everything looks pretty good.
Sure thing.
Okay, we should be good now. How does that sound?
Yeah, there you go. Sounds good. Well,
Awesome.
welcome,
yes,
welcome.
Everything is.
Yeah, everything's good down there.
Everything's good.
Y'all about to start getting some spring here soon, ain't you?
Yes, my hay fever is acting up. Absolutely, I can feel it in the air, and yeah, it's getting to me. But spring has sprung.
Yeah, that is the same thing that happens to me when it becomes spring here. Yeah, the hay fever, the pollen, it just tears me up at times. So I know what you're about to go through. Or it sounds like you currently are going through.
It's just, I mean, it's like you'd think something so small coming off a flower, your body would be able to say, hey, that's all right. That's not going to hurt me. But in matter of fact, it goes, yes, this is the biggest threat you're going to face today. Let's freak out.
Oh boy, we're getting some light.
There we go.
We're freezing up. Let's see. Okay. A little bit of lag issues. Sorry, everybody in the chat. Welcome. Jamie, chasing cash. Okay, how's it going? Would love to be an affiliate. Hey, check in with the holaprime.com website. Yeah, there's and the Discord channel as well. Definitely get some more info there for that. Yeah, Jamie, sorry about that. Just getting a little bit of fun techie stuff going on first thing, but I think we're good to go now. So yeah, hey, we got we got interest rate decision on Wednesday coming up. What are you thinking about that? Let me go double check.
Same as the other week. Just get the popcorn out. I think you put it best. Get the popcorn out, sit, wait, and let the chaos unfold.
Yeah. Okay, so I actually just looked at the CME group tool. It looks like we're 96.4% certain for the 25 basis point cut, and we're down to only 3.6% chance to do the 50. So I know last week it was a pretty close to like 90-10 split on that. So just a few days later, and it looks like we're pretty well pricing in the 25 point cuts. So we'll see how much that does or doesn't change through Wednesday. But let's see here. What else we got on tap? Let me pull up my economic calendar. Back end, if you can, pull up my chart, and we'll take a look at a couple things here as far as items to keep an eye on this week. Okay, so Sunday's got China retail sales. Monday, not a whole lot. Christina Lagarde's going to speak. As far as red events, it looks like the first red folder event we have is 7:30 on Tuesday. That'll be 7:30 a.m. Central Time, so 8:30 Eastern, 8:30 New York time. Consumer Price Index for Canada will be coming out. So we'll definitely want to be careful with Canada pairs at that time. Same thing with the dollar. We got retail sales. Those are coming out jointly, again, at 8:30 a.m. Eastern Time on Tuesday. So that'll be our first major road bumps, if you will. Our first major event that will definitely want to keep us safe. So definitely be careful in and around those times, as always. And then Wednesday, of course, we do have the funds rate here in the U.S. Again, looks like they are projecting in the 25 basis point cut. That'll be at 2:00 Eastern Standard Time on Wednesday. So that'll be the big event on that day. And then we do also have some other items here. It looks like the pound at 2 a.m. has a CPI report for Wednesday. Canada has their statement as well. So Canada is actually pricing in a 25 basis point cut as well. So that report will be released. It looks like 9:45. Let's see here. And then a little bit of evening news, evening for here in the States anyway. Be morning time, your time. But New Zealand does have their GDP report coming out at about 6:45 New York time, followed by Aussie's employment numbers, employment change and employment rate numbers. So that's all Wednesday. Wednesday is action packed. And then Thursday morning here in the States do have some the bank rate statement for the British pound, which they are, looks like, projected to keep rates unchanged at 4%. And then our normal U.S. weekly unemployment claims numbers at 8:30. And then tentative, so we don't really know the time yet, but Japan's monetary statement will come out as well. They are projecting to keep their rates the same as well. So nothing major on Friday. So it's all about, as far as the red folder events, looks like Tuesday, Wednesday, Thursday, but obviously Wednesday takes the tacos. So that will definitely be a fun time. So, and then just kind of recapping. So last week we did have the CPI for the dollar, which was a neutral rating. They did have their forecast and actual number was the same for that, 2.9% inflation. The PPI number came out on the 10th. That was a decline. So negative for the dollar, but good for our pocketbooks over here in the States and the stocks and all that. So, and then, the jobless claims, looks like we missed that number. So that was a big miss. That was a really big miss for the dollar. I was looking at this chart the other day, and it's not looking so good. Let me go pull that up real quick. Jobless. I wanted to pull up the chart to show kind of an idea of, let's see here, jobless claims. There we go, unemployment claims. This I thought was pretty substantial. So let me pull this up real quick. Hold on a second. I got to move some things around so I can get this report over, copied and pasted over. Oh, come on. There we go. All right. Let's try that again. Copy, paste. All right. There we go. Yeah, let's take a look at this report. So this was the claims that we had come in. And as you can see from the release we had the other day, I mean, that was just gigantic. That was a multi-year high as far as the unemployment claims coming in over here at the States. I mean, we've been kind of hovering just under 250,000 for quite a while, and bam, we just pushed up. So, yeah, we got the rising unemployment claims, the inflation that's kind of being a little bit on the volatile side. So, yeah, no doubt we're getting the 25 basis point cut. It's just a matter of between now and Wednesday if they want to decide to drop at 50. So, yeah, it's just a little bit of a volatile time right now for the U.S. dollar. I was looking at the again, just overall the score. I mean, we've only had 22% of the U.S. reports beat expectations to benefit the dollar. So only 22%. And we haven't had a single good piece of news since the services PMI back on the 4th. So we're still in expansion territory as far as that goes. But yeah, all these other reports have all come out either neutral or bearish. So jobs numbers, inflation numbers, you can see those have scores of 0. So they're just missing. It's underperformance. It's economic underperformance for those fields. And then growth is right about average, 50%. So yeah, I mean, it's been really the same narrative for a while for me. You know, buy gold, buy silver. I mean, gold has been half of my trades in the last few months just because of that. So, yeah, I'm still getting a bullish signal on gold at a 7. Silver is actually falling off the list for the time being. It'll probably be flipping back on, though, I would imagine. But yeah, very bullish. I mean, I've got 5 very bullish items right now, and it's all about buying the Aussie dollar, Aussie Swiss, Aussie CAD, Pound CAD, Aussie New Zealand, and then the New Zealand CAD. Those are the strongest ones. When we take a look at all the economic data, give it a point for beating expectations, delete a point for missing expectations. Obviously, meeting expectations just gets a 0. So, yeah, you got a lot of blue up here, and just a small amount of reds, meaning they missed expectations. So that's going to be the top 5 items on my watch list as far as buys go. And then the CAD JAP, Canada yen currency pair is going to be the strongest sell at a -8. So I did make some money off of CAD yen last week. I'm going to try to do it again. I mean, it paid me on a pretty good trade on Wednesday, I believe it was. So yeah, that's probably going to be my number 1 item again. Buying the Canada, selling the yen. So what do you think, Rand? Do you have anything on your immediate watch list at the moment?
I mean, I'm very close to you in terms of gold and silver, especially when the DXY and the news coming out is pretty bearish. It makes sense to, hop on and, get back into that gold game. I know you were saying that about half of your trades have been on gold. I mean, last Monday, for example, before I cut out, all our trades had been, the rest of the market had slowed down, and I was either looking for really shorting on most of the currency pairs. But yeah, gold just being very bullish and putting in two wins for me last week and a loss. So nice. Yeah, that's kind of what I've been keeping my eye on there. And it always makes sense to bet on gold when currencies aren't performing as well as I'd like them to be.
Yeah. I mean, I've always been a currency trader, but I've turned into a gold trader over the last 3 months, just like that. It's good. It's good to really get good at your 1 or 2 or 3 favorite assets, but it's good to diversify, and this is why. Because like you say. It's, with the dollar just missing all these expectations and underperforming, it's the natural cure is go to gold, buy gold. So no, it's been working. It's been working out pretty well. But let me see here. So this was my Canada yen trade I had the other day. really, really fell in love with this. I put this in the Discord for you all as well. Whenever I set up charts like this, I like to put them in the chart setups tab under strategy and education on Discord. So you guys and gals, feel free to go jump on there and check them out periodically. And I kind of break it down, let you know the reasoning for getting into a trade. I don't like to just show a winner or show a loss. I like to explain why it was so. What was the reasoning for getting into that trade, right? So it's just my little way of trying to help you guys out, just to kind of help you start thinking about things like that for whenever you're looking for reasons. That's really the thing, right? It's just a matter of stacking up the odds enhancers to put that trade idea in your favor. So yeah, just go check that out. I also throw books on there as well under the resources tab. Some various trading books I've read, business books, economic books, life books, right? Because trading at the end of the day a lot of it is psychological. So if you can go understand how people think and why people think the way they do, then a lot of it translates into trading, right? The concepts of fear and greed and all that. So yeah, definitely check those out. I put those on usually Mondays or Tuesdays. So, just looking at this trade, I was talking about this on Forex Fire on Friday. If I had to hand draw my perfect setup, this is what it would look like. So obviously downtrending market here. I did a short off of this supply zone here. Awesome runaway gap out of that basing action there. Pretty good volume spike on that big red candle. And only had 3 basing candles. So that's another important thing. Okay, 1, 2, 3 basing candles. So we have our leg in candle, which is that big green candle, and then 1, 2, 3 basing candles, and then the big leg out. So that's important, because if I start getting 5, 6, 7 candles in this thing, kind of like over here, then that's just too much time spent in that price range for me, right? The less time price spends at a zone like that, at a basing action, the better, because that typically doesn't give everybody the time to get into the trade that wanted to get into it, right? So the concept is, price moves away, but then when it comes back, this is what I like to see. So I love to see sideways action right before it runs into my zone, because it creates these liquidity zones. Okay. All the traders in this area that are selling, they're obviously putting their stop orders just above, and vice versa, right? Everybody that's buying down here, they're putting their stops down here. So for the concept of selling this market, at some point, I'd like to see price go up, collect the liquidity, because this is what the big banks and institutions feed off of. They're placing $1 million orders. So they have to have, if they're trying to sell the market, they need to have buy orders, right? They've got to fuel it with buy orders, which is obviously the stop losses, right? The opposite of a short sell is a buy. So the banks are collecting these buy orders along the way, and then ultimately jumping into the supply zone itself where the unfilled orders are, so that they can catch the ask and push price down. So yeah, that's just again, perfectly what I got. Now I did kind of risk it on the 11th, because that of course was, oh my gosh, which report did we have? That was, the CPI report came out at the same time as the unemployment claims. So that big, ugly 263,000 unemployment claims number came out, but also we had a slightly warm CPI. So I was actually kind of risking it, to be quite honest, because, I had tapped into my zone, and I actually put 2 sell orders in there. And then, it was right about here. So I had a decision to make. Do I want a chance staying into this trade, or do I want to get out? Well, I just decided to widen my stop loss when I got into the orders. So I had a stop clear up here. Okay. And then, as you can see, whenever that report was released, we did wick up through the rest of the supply to collect the rest of the unfilled orders, and then before moving down. So it's kind of risky, but I felt pretty confident about it. I wouldn't necessarily advise it. Do as I do, not as I do, as I say, not as I do type of thing. Right. But I just felt pretty good about sticking with it. So, and a CAD yen, as we just saw, is a very strong bearish signal on my top setups list. So yeah. So we just jumped down, and then I just wanted to make sure to buy the cover just ahead of the underneath demand zone. So yeah, a really good trade on Thursday. And yeah, now it's just a matter of trying to do it again. So yeah, just kind of looking at a few of these alerts I have set. Yeah, so when we had the CPI and the unemployment claims number release, it kind of created a whole bunch of these ugly wicks on a lot of the pairs, right?
Yeah.
The same spot, big spike down before the move the opposite direction. So it's kind of messing with me here. But, nevertheless, though, yeah, for Aussie dollar, I do have a demand zone here, but the only thing I'm leery about with this demand zone is the fact that we did already bounce into that overhead supply zone from way back here. So it's currently in the middle of it now, kind of chewing through it. But we do have this supply zone way back here in November. So, zones, they don't necessarily expire. I mean, obviously people will pull their limit orders out, but it's just like a major, support or resistance line. You just always got to be careful with it. So, but yeah, I mean, great uptrend, obviously, but I'm just a little leery that could be too strong to overpower that piddly little 10-minute demand zone, right? So it's not my favorite setup on my list, but it is a setup. So we'll just see. I mean, if we get price come down, I'm going to be very, very, very picky with this thing, meaning I'm going to require that I see a bullish engulfing candle, form in this zone somewhere and give me like 3x, 4x the volume of the previous VSA candles down here, volume candles. So going to be very, very picky on it. But again, I think there's going to be plenty more good setups, that I don't even have to worry about that one. So, but again, it is one. We did have, so we had Aussie, Swiss. It was on my bullish list. Looks like it dropped into a demand zone right when I was trying to get onto the Zoom and everything. So that one's already run off and left me, as you can tell. But let's see, I was looking at this on 30 minutes. So just looking at this, that's that ugly CPI and unemployment wick. Of course, it affects all markets, right? It's a U.S. report, but it just goes to show you the power of what a U.S. release can do, even way over there in the land down under where you're at, right? I mean, it can definitely mess with the markets. So, but yeah, as you can see, it was a beautiful demand zone. I mean, we had a basing action here. We had a big fair value gap coming out. Price has already come down and just got rejected like that. So yeah, I can't buy now because if I buy now, I'll be chasing price. Okay, if you guys have a setup and you miss it, just let it go because there's another setup just around the corner, right? I didn't have a limit order set on it because just the same as the Aussie dollar setup I just showed. I basically I didn't want a limit order. If I were to be getting into this trade, I'd have been watching it right now, looking for that, we'd have probably had to done it way down on a 1 minute time frame. Okay, perhaps you get it on the 1 minute candle. I don't know. C'est la vie. That's all I got to say to it. Yeah. You can just go do your thing. Yeah, we'll just look on to the next one. So, okay. So that's a moral victory. It's already given a 1-to-1 potential. So we'll go, we'll smile and look at the next one. Pound Aussie for a short. Got a little supply zone up here on a 30-minute. 30-minute supply up here. Again, really good volume at the bottom. Really good push out of price, right? A couple leg out candles with inefficiency. So that's the inefficiency in the market closest to this origin of this strong move, right? So that's definitely a good setup. I'm going to be keeping an eye on there. Speaking of gold, Another good setup here. So we do have, and this is a 30-minute time frame. So a 30-minute demand here. Again, we got the gaps coming out, strong price, increasing volume. I do like to see that volume spread analysis candles. And this just like the CAD trade I just showed a minute ago. We're starting to get this liquidity build up from these people, these traders buying this market here. They're putting their stop losses down here. So their stop losses are sell orders, right? So they're putting their sell orders just ahead and even inside of this demand zone. So that's another really good setup. Give me that liquidity sweep down there to demand. Now, it's a 30-minute demand, but it's also inside of a 1-hour demand. So it's a little bit of confluence that I like to see. There's also a 2-hour demand if we put it to that wick there, and even a 4-hour demand. Okay, so we got all kinds of demand zone influences from various time frames. Oops, I need to put my magnet tool back on. But yeah, I mean, there's your 4-hour right there, 4-hour demand, right? So lots of good looking confluences here. I do like it. So that'll be my favorite gold setup at the moment. I just set an alert at 36.34, but the proximal line of my zone, yeah, it's going to be about 36.33. 36.33. So that's probably going to be one of my top setups. And then I also, if that zone happens to fail, well, that's okay. I got another one down here, and I even have another one down here. So this one is more of a 4-hour, I think it was. Yeah. Yeah. So I got a 4-hour demand here. Fair value gap coming out of it. Increase in volume. I like to see it. And down here, I have a daily demand, which is the yellow box with the 4-hour inside. So excellent confluence. I mean, I got all kinds of options here. All kinds of places that we could be looking to buy gold. Okay, there's the daily demand zone candle, just for context. So yeah, that's probably going to be my top. Yeah, I like it. I like to have options. I mean, I like to pick the best zones, but it's also nice when you have zones on top of zones on top of zones. Give you plenty of options. Yeah, Aussie, New Zealand. This one's not as clean of a setup, but it is a setup. I mean, you got a lot of wicks all over the place. I mean, I do like the liquidity underneath these little points. This double bottom, triple bottom, quadruple bottom, however you want to call it. It looks like it came down close to my zone or close to my alert. Would it miss it by a pipette? Or it hit right on. Well, how about that? Yeah, so I would probably not be interested in trying to take this now because price already came to the zone. Yeah, it just missed it, but it could be stronger. Let's put it this way. So that leg out candle was nice, but it could have been nicer. Like it didn't really push up high. It pushed up immediately, but then just kind of danced sideways. Too much indecision for me. So yeah, if I were to buy this market, I'd probably want to find something lower. But the problem is, yeah, there's just not a lot of strong zones coming out of this area. I don't see any big giant movements. So again, there's plenty of other things to be traded without having to worry about finding something on the Aussie New Zealand, I think, for the way I trade, right? For supply and demand. So pound Canada dollar, got a nice demand down here, 1.8725. And let's see here. Yeah, I think that's up top. Now, again, I do have another one down here, if just in case this fails. Again, I'm just kind of like Aussie, New Zealand. This whole price action is just not very exciting. This is exciting. But that is an opportunity for a smaller time frame. But again, if it doesn't work, got another option down lower. A much stronger and much higher probability option down here. So we'll see how that goes. Silver, the other shiny metal. Okay, got a nice $41.50 level for this demand right here. Really loving this. Pretty good volume spike coming out of that leg out candle. Yeah, and even going down to the 15, we still have a gap, just a little bit of a gap between those two candles, fair value gap. So yeah, I like to see fair value gap confluences as well. If I'm seeing a fair value gap on a 4 hour or on a 1 hour, I really, really, really want to see the same thing on a smaller time frame, just so that you can get an exact spot of where that turn might take place. So like, here's that fair value gap. Just a little guy. Okay, it's just a little guy, but it is a gap nevertheless. So that shows strength. That shows strength from the origin of the strong move, right? Fair value gaps, supply and demand zones, pretty powerful combination. Really powerful combination, especially when you're buying and selling close to the origin of that overall move. So that's silver. Now, again, silver is not on my list, but silver is pretty much the little brother of gold, right? So, I mean, I'll still keep an eye on it. I bet the silver will probably pop back on my list. I don't even know why it came off, to be honest with you. I have to look at that a little deeper, but Aussie CAD. Yeah, got a lot of Aussie New Zealand pairs. That's pretty much the bulk of my list, my watch list. And let me see here. I wanted to go back over here and look at the currency heat map. Let's see why. Let's see what kind of scores we're getting. Okay, so Australia. So you guys have exceeded expectations on 71% of your report releases. So that's good. That's a really good thing. Again, that just shows economic outperformance. That's looking quite strong right now. British pound is the strongest at the moment, but yeah, followed by the Aussie, and then wow, that's it. I guess the euro and the New Zealand would be second with a 50%. But yeah, this dollar it's right down there with the Swiss franc. I mean, it's just super weak right now. It's missing everything, missing all the expectations. The yen's not doing much better. So yeah, really, any chance to buy the pound or buy the Aussie dollar, that's what I'm going to try to do. Just match it up with a weak currency like the franc or the dollar or the Canada dollar, US dollar, Canada dollar. So yeah, just from a 30,000 foot view, that's a trade plan all in its own right here. Now it's just a matter of time in the trade on a chart. But yeah, just going back to where are we at over here? Euro Aussie. Yeah, Euro Aussie. Daily demand. 4 hour demand just ahead of it. So in a situation like this where I have a zone on top, like a smaller zone just ahead of or even partially in the higher time frame zone, yeah, I would probably just honestly wait for the daily demand. So the bounce off the proximal line of the daily demand rather than the proximal line of the 4 hour, because that's where the confluence really starts. So that's kind of my thinking on that. I mean, you can't really go wrong with just buying on the 4 hour itself. But again, I just like that extra confluence. So for me personally, it looks like I need to adjust. Oh, never mind. I'm sorry. This is on a short side. Euro Aussie. Let me double check. I just realized it. Oh, yeah. So never mind. I won't be buying this market anyway. But since that's a short option, a short idea, I would definitely be wanting to buy to cover just ahead of the 4 hour demand if we were to get a push up, or just the bottom of this as well, because I don't want to risk trying to buy down here somewhere, because, well, still at the end of the day, it's still a demand zone, even if it's bearish fundamentals. So it could still have unfilled orders there, push price back up. So this would be a short one, a small, like not a huge trade. Would that even be a 3-to-1? Okay, so 32 pips, 369, about a 2.9-to-1. So that's questionable. That's probably pretty close. That's good enough for me. I like 3-to-1s myself. I don't really like to do anything for a 1-to-1 or 1.5 to 1, 2 to 1. I want it to pay me a decent amount.
That's what I like.
But yeah, last thing. What's that?
I said that's what we like.
That's right. Last thing I wanted to really look at real quick was just last week's. Before I pass it over to you, see what you got going, man. Just wanted to take a quick look at the COT report. Where in the world is it? Oh, there it is. I keep so many items on there, they get hidden and buried. Yeah, here we go. Yeah, so this is what the big banks and institutions did last week. Okay, so I got too much crap on here. 1 second. Let's just get over here. There we go. All right, so yeah, the big banks and institutions. So it looks like the big winner in what they bought and added to their longs was the Dow. So they increased their long percentage by 7.38%. So that's a pretty good spike. Really, anything that, for me, just my observations, anything that's between like 2% and minus 2% is just more of kind of the equivalence of meeting expectations, meaning it's not really going to change a whole lot. But if it's above 2, if it's under minus 2, then that's a little more significant, obviously. But yeah, long story short, Dow Jones, big winner. Looks like they added 3,158 futures contracts. And they did also add some shorts contracts, 584. But yeah, you average it all out, it was an increase of 7.38%. So, and they're right at about even between their longs and their shorts overall. And then obviously the yen, 3.73% increase. NASI had a 3%. Let's see, what about the other indices on here? Platinum. Okay, so Russell minus 2.57, and then the S&P. Okay, so they ended up increasing longs on 2 of the U.S. indices and increased shorts on 2 of those as well. So a little bit of mixed results. Gold, they did increase by 1%. Let's see here. Yeah, Swissy minus 3.3, New Zealand minus 3.19. Yeah, pretty much everything's not too much of a change outside of the Dow and the yen and the NASI. So I don't have any of the U.S. indices on my top setups page right now. I haven't even had them on there for, it's been like 3 weeks, 3-4 weeks. Somebody asked me to look at a US 30 chart the other day. I'm like, I haven't even looked at them because I've been so focused on gold and silver and some of these safe haven pairs. So, but yeah, that's a little, that's just interesting to note. Increasing on 2, decreasing on the other 2. So again, a little bit of mixed bag results, but still keeping my eye on gold and some of these Aussie and New Zealand pairs. So I'm just going to buy you out a house and home, Coach Alex.
Yeah, I hope so. Easy. What a great analysis. Well, back end, if you're done, Tiger, back end, I'm sharing my screen. If you want to chuck mine up, we can go over a few trades that happened the other day and have a look at what I'm looking at. Okay, cool. So we're going to start off with Euro USD. We do have these other charts here. If you've seen me on the Friday, you know that I've got gold and I've got, well, technically this is usually oil, but I've got the DXY up right now because I've been checking out what the markets have been doing. Now, there's a lot on my screen, but don't worry, we are going to fix this in just a moment. So we had a fantastic trade, probably a textbook trade. Tiger was talking about his textbook trade earlier on the session. This is definitely my textbook trade coming through here. So we had our range on the London session that started off here. We can see it started off at my 5 p.m. and then it moved all the way till 5:30, and that's where the range cuts off. And we can see that the box is then just extended out all the way across from here. Now, you guys know that I like it to initially break out of the range. We need that to happen first and then come back into it to retest the VWAP. So that's my volume profile that I'm looking at there, a volume weighted average price. So that's what I'm looking at through here, which is this thick red line. That's what we can see here. Now we've also got more EMAs happening in this section, and I'll go over that in just 1 second here. I would need to delete that from earlier on, but we'll go over that in just a second. So what happens, right, is it breaks out of this area and it comes right back up, basically just touching this line. Quick handshake saying hello, and then just immediately falling off. Now, did it happen as quickly as I would have liked it to? Maybe not. It did play around. We were obviously just building some orders or whatever it is in this area. But as soon as we break through this lower Bollinger Band here, because that's what this line is, and this line is the blue ones, the Bollinger Bands essentially. They do move, so it's not like your standard one, because you can see through here, they can break. No longer do we have a thick blue line, but we have a very, very wispy blue line that comes through this section around here. Now, that's what the break is for me, right? Where we break from that solid blue line into that wispiness. And right as we come up through there, we have this big engulfing-ish bearish candlestick. And then we just break up underneath, retest this area again, which is fantastic. And then we just let it go. We just let it go. Now, at this point, we entered, right? So if I go into here, as soon as it breaks beneath it, at this point we enter, and we always put our stop loss at the last high. Now, of course, I would give it a little bit extra just to make sure that we've got some room here. Now, in the background, you can see these red lines. We've got one that runs through here and one that runs through this area here as well. They're just 50% of this range. So from here to here, that's the exact same space from here to here, and then so on and so forth. So if I hop into an area above the first line, which I did at this area here, I'm going to go for that secondary red line. Otherwise, I'm basically going here for a 0.36 RNR, which is not something that you particularly want. Not even brokerage fees. It's just gonna rip you apart. So we did get a nice 1.15. However, there was definitely scope. And we'll be able to see this later on in the London session when we are going live again. It was definitely scope to stay in this trade just because of how powerful the downwards move was on this 1 minute chart. Realistically, only one tiny bearish or a bullish candlestick was more of a stop, if anything, and then just continue to barrel down. Yes, a little bit scary holding on here, but there was the potential to even move somewhere down this area and nearly get the 1 to 2s. Now, I know Tiger, he likes the 1 to 3s, but this scalping on the 1 minute, you do get into a fair few trades. So it can be viable to go for the smaller risk rewards. But that was my textbook perfect trade. Breaking out of this range here, telling me I want to be bearish. Go on.
I should clarify. That's more the higher time frame. The smaller time frame, yeah, a little more relaxed on that.
Yes, exactly right. Exactly right. I do
just
like
for clarification.
Yeah, definitely. That is 100% true. The further down you go, the less R&R you can hit because usually you are going into more trades. The higher the time frame, or
take what you get.
So yeah, exactly. Yeah, you're waiting around. Whereas this one, sometimes the action it's on. If you're ever around for the London session, you will see me interrupting Tiger at multiple points mid-flow just to say, "Oh, something's happening," and that's what can happen through here. So it was a beautiful trade. Absolutely loved that. Had a really nice move back up. If we actually looked, and there was a weekly one. There was a weekly VWAP that, and you can see it here, right here on this blue line. This is our weekly VWAP, this small one here. we're allowed to hop in off this one as well. And it does the exact same thing. We build a solid blue line down here at the bottom and this quick pullback. Yes, it comes up and slightly breaks through, which is not particularly what I want. But when it came down, it retested this line, even if it is a small retest. As per my rules, that's absolutely fine, and we can enter into this area. And again, we broke underneath. We waited for that thick blue line, or the solid blue line, I should say, to finish. And then we had literally another one. Now, this was absolutely fantastic. Technically, again, you'd be going for this. Well, let me go to my last high, actually. It'd be here, which is another 1.17. But again, if we're not getting a single bullish candlestick as we head down and down and down and down and down, I'm staying in. I'm not hopping out. You know, if the market's telling me, hey, I'm going down, I am going to continue to go down with it. And as such, we managed to get into an area somewhere down here. Now, for me, a 1 to 2 on the 1 minute time frame. Wow. That is a big event for me. That is a huge event. I don't usually get them. I'm usually hopping out a lot earlier. So it was quite exciting to be sitting there. If you were to be watching me or being my next door neighbor, would have been going crazy. Yeah.
But
great. It was a fantastic trade.
No, that's awesome.
I did want to say, Tiger, I absolutely loved your analysis for you guys sitting there as well. I do trade, and here at Hola Prime TV, I am the scalper. I'm in here. But that analysis that Tiger had before, that is basically the genesis of my other Forex strategy. It's very, very, very similar. Just to say, if I get out the way here, I absolutely love it when we build some sort of range, hit that liquidity, or we're building those orders here and here. This is literally the basis of my own strategy as well. And hopefully I've got a fair value gap or something in an area coming down or coming up to it. And I'd be looking at it through somewhere into this zone, somewhere around here, and just looking for the markets to come up, hit that, and then fall down. It's an absolutely beautiful thing. When you were showing me your perfect trade, I was sitting there going, wow, I wish I was there. Did I get that trade? I don't know. Exactly right. Guys, I'm seriously, if you're starting out, such a great it's almost fundamentalistic in what it is here from building liquidity zones. If you're able to see that and you're able to spot that, just like Tiger, the master coach here, you're in for a long career. But you have to keep that psychology in mind and make sure that, as you said before, like the AUD trade, I think that you just missed, don't be chasing it. That's the thing. If you stick with your fundamentals and you stay here and you're looking good and you're not chasing it and you're not your own worst enemy, you'll be in for a long career. But we've got to make sure that, hey, we're doing well. So that's what I would be saying. Anyway, that's it for my trades through there.
Right on. Yeah, I was Friday night into Saturday, I could not sleep. I laid down, I tossed and turned for several hours. So I got up and decided to mess around with some Bitcoin because why the heck not? Markets closed. So it's just funny because I ended up getting into a little Bitcoin trade going down to I think it was a 15-minute supply zone. And I mapped out a 1 hour demand zone underneath, and it just worked out perfectly. It was like, I just threw a small amount. I threw $100 risk on and came out with $273, I think it was. So it's not a good idea to trade when you're bored or you can't sleep, but it was just something I wanted to try just so I could say I placed a weekend Bitcoin trade. But my analysis was spot on because it bounced off the supply, went all the way down. I bought it just ahead of the demand, and I was almost going to buy the demand zone back, on the way back up. But I figured I didn't want to press my luck And sure enough, it would have actually been a profit as well. So that was just kind of interesting to do, at that time. Yeah, because I have these crazy sleep hours. So now when I try to go to sleep at a normal time, I just lay there and toss and turn. So I just thought that was quite interesting. But yeah, again, just more testing because I've never traded Bitcoin. I don't think that might have been my second time I placed a weekend order. But yeah, works. Supply and demand works the same all day, any day. I love it. Finding those liquidity, like you said. No, it's good stuff. But yeah, like I said at the outset, guys and gals, it's all about Wednesday. Regardless if they drop it 25 or 50 points, regardless, we're going to have volatility because you're going to have one group wanting the 25. You're going to have one group wanting the 50. So either way, you're going to upset somebody, right? Either way, somebody's going to be annoyed. Some people will be happy. Some people will be annoyed, and you'll see it in the market and the price action with all the wickiness, I call it an earthquake telemetry machine, right? With all the spikes up and down, with all the volumes. So just a good rule of thumb when that report comes out, just make sure and just, I would just suggest close out of your trades. If your trade's good enough, and Coach Michael says this all the time, if you love your trades good enough, then just close it out and just reopen it. It's really just as simple as that. I mean, because the last thing you want is to be up 50, 60 pips, unrealized profit, and then it take it all away. Or get into a trade, right before, and then it just take you out in 2 seconds, right? So it's just best to wait for the wicks to kind of calm down, wait for the volume to, kind of come down to normal. And then at that point, just pick a trend and write it. So it's always a good idea to do that. That usually at least 15 minutes before a report release. And then sometimes upwards of 45 minutes to even an hour after the report, because you'll start to see the volume at some point start to taper down regardless of whatever it is you trade. It doesn't matter what you trade. But yeah, when that volume is just super spiky, it's that's where people are getting chopped to pieces. That's where people's accounts are getting blown. It's not a good place to be. So that's just a good rule of thumb. When hop onto that trade when you start to see the volume come back down to at least close to normal, like it was 30 minutes or so before that report release. So just a good rule of thumb I like to let everybody know about. But my friend, that's a super fast hour. So we will be, we'll be back on for Quiet Markets here in a couple hours. I believe that's Coach Michael, I think. Are you on Quiet Markets?
I am on.
Alex?
I am on.
Oh, okay. Mm-hmm. Okay. So, just jump back on here in about, 2 hours and 15 minutes. Coach Alex is going to pack us full of wisdom, and I'll be watching myself. So, Alex, good chatting with you, brother. And
it's always a pleasure.
Brother from down under. All right, guys and gals, take care. We'll talk to you soon.
Okay, see ya. Bye.
All right, buddy.
Hola Prime, trade with transparency.